also got our technical guest, Mr. Dharmesh Shah from ICICI Direct, now joining us in. Mr. Shah, what do you think about the markets right now? We're seeing it's quite flat across indices as well. Where do you see pockets of opportunity for traders right now?
So good afternoon. Absolutely, I think so the market, if you see for last 3 weeks, market has been consolidating in this range of 23,800 to 24,500, 600. I would say in the range of 20-day moving average and 200-day moving average. But eventually, we expect, I think so, market eventually should look for a target of 24,400 to 24,500 in the days to come. Interesting point to highlight in this current up move is, I think, if you look at the Nifty mid caps and the small caps, we have been making higher top, higher bottom, which of course mid cap index has made a new high. But the market breadth, again, a good indicator for the sentiment of the market is something which we like going forward, where stocks like, again, like percentage of stocks, I would say, which are trading about the 2-day moving average, are being better, where as compared to 42% currently at 53%. That seems to be getting better going forward.
So okay, Dharmesh, I hate to interrupt. Dharmesh, I hate to interrupt. Apologies. We have a little bit of an audio issue on that line, a little bit of patchy audio. But yes, what Dharmesh was basically talking to us about is the kind of levels that we need to be watching out for on the Nifty and the sensex. Now, remember, a bunch of technical analysts that we have been interacting with off late have been marking this 24,000 as a very crucial support level to watch out for, and then 23,800 to keep in mind if 24,000 is breached on the downside. On the upside, of course, levels like 24,500, 24,800 is the kind of numbers that we're seeing. We were speaking with Sahaj Agarwal yesterday, and these are the levels that at least he was spotting for the market. So yes, these are going to be some numbers to watch out for. But 24,140 right now, while we are, while we've held on quite stably on the day where the sensex expiry is at play, so much has happened geopolitically. Remember, the US has closed in the positive territory on account of their PPI numbers, but you've got very soft moves coming in from Asia this morning. Japan was low by 3%. You had Korea that was lower by 7%, South Korea that is. And that spillover effect has at least not hampered our market. So that's basically the setup of the market right now. And we've got Dharmesh back with us on the show. Dharmesh, continue making your point about the kind of levels that one should be spotting on the Nifty.
Yeah, exactly. Sorry for that trouble.
No worries.
Technical issue. Yeah, so again, I would say that for the levels to be watching out, it's a 23,800, 900, which is again a 20-day moving average, will be the strong support for the Nifty, which we expect to hold in this current corrective phase. Because if you look, after crude moving back to 85, 86, we're still about 24,000. So there is some bit of a sensing that the market, there is some buying demand at the lower levels, around 23,800, 23,900. On the higher side, we believe 24,600, again at 200-day execution moving average remains to the stiff resistance for the Nifty. So more of a consolidation, this range of 23,800 to 24,600 continue. But one interesting point to highlight was the market breadth. The percentage of the stocks which are trading above the 200-day moving average of CNX 500 has improved from 43% to 53%. So it's clearly showing it's more of a broad-based rally happening in the market, where again makes the market more healthy. So any decline towards 23,800, 900 should be looked as a buying opportunity.
Okay, that's on the index level. But Dharmesh, can you also help our audience with what specific stocks and or sectors, what specific picks to look out for in this market right now?
Yeah, so again, just to look for the sectors, again, we will be constructive positive for banking sector, BFSI, where again, NBFC looks more promising. Inside the NBFC, again, housing finance companies looks more promising. If you look at the Nifty Financial Index, I think that is given a breakout after the 3 months of long consolidation. So indicating, I think, so things should get better for overall NBFC space, where again, housing finance companies like PNB Housing wish to be the top pick at the current market price. Again, the stock, if you look on the weekly and the monthly perspective, forming a breakout of a downward sloping channel, indicating, I think, so the end of the corrective phase. The same time, holding on to the 52-week EMA, higher top, higher bottom formation, looks for a target from 1220, keeping a stop loss of 998. So PNB Housing remains to be a top inside the NBFC space. Apart from that, again, for the chemical space, Aarti Industries is something one which we like. If you look for the chart from the Aarti Industries from the short term to medium term perspective, on the weekly chart, it seems to be on the verge of a breakout of the strong sets of volumes, indicating, I think, so the days in the coming week, We expect the stock to head towards 545, giving a stop loss of 483. So Aarti Industries and PNB Housing Limited we are talking.
PNB Housing and Aarti Industries looking good to Dharmesh right now on the charts. On that note, Dharmesh, thank you so much for your time. Good as always to be speaking with you today. Thank you.